Today is Thursday, the 6th of August, and coming into the market open today after yesterday, it was the first red day that we've seen since this kind of recovery rally began. And all major indices actually put in their first red day, excluding the Dow Jones, which did put in this shooting star and barely closed up on the day. So, just based on price alone, it's showing that this momentum is starting to fade a little bit. Prices are definitely overextended across the board in terms of the extension above their 10 days and basically lower time frame moving averages. So based on just price alone, it would make sense that that profit taking is occurring and that potential selling pressure might coming into this weekly end or the end of this week, given that tomorrow being Friday is such a key day in terms of news events. So NFP figures are coming out tomorrow, as well as the unemployment rate figures, which no doubt will have an impact on the sentiment of the market. If they come in weaker than expected, it might be a bit of cause for concern and might create some more upside pressure in terms of the bond market. But in regards to the bond market, all of the yields or the timeframes that I monitor, the 2 year, the 5 year, 10 year, and 30 year, they've all started to come into their 20-day moving averages and actually close below, except for the 30 year, which is coming into it but hasn't touched it just yet. But to me, that's suggesting that there's some cooling off that's occurring, and that potentially the bond market's going to stabilise, and that no further upside price action is going to occur, at least for in the short term. And that is also supported by the fact that the dollar index saw a little bit of relief on the Monday, but since then has just kind of faded that relief. So no strength coming into the dollar, and both of these things are good for risk assets, or not good for risk assets, but good for equities overall. So in regards to commodities, oil and silver did catch a bit of a bid yesterday. Gold and silver did catch a bit of a bid yesterday. Gold actually had its best day since kind of February, back here at the start of February after this initial sell-off after the top. And I don't think that it's because it's acting as a safe haven or anything. The Iran-US situation seems to have stabilized a bit. Oil's also come off massively from its initial spike that it had towards the middle of July. So I think in regards to the precious metals, I think it's just basically the fact it's a technical move, and it's basically the fact that volatility was reducing throughout this whole period, and now the lower time frame moving averages are starting to converge, and it's just a technical breakout. But I don't really suspect this to be a sustained move, and that it's a cause for concern in any way. Bitcoin didn't see a bid during this time, so the gold 2.0 thesis remains kind of dead, I suppose. And it makes sense given that the main thing that the crypto market's waiting for right now is the Crypto Clarity Act, and the progress in regards to that is kind of not happening or non-existent. So the Senate will break up for around a month recess, and from August to September, and the last day to actually pass the Clarity Act is tomorrow. So if it doesn't get passed tomorrow, then I don't really see which I don't actually see happening. I don't see the crypto market having any sort of sustained move to the upside until that does happen, or until there's some quote unquote clarity around just the crypto policy and crypto markets moving forwards. So the one thing that I would say about the crypto markets is that the fact that these lows are holding and volatility is really starting to reduce now, it is paving the way for this to be the bottom, and just the market latching onto any sort of positive catalyst to create a move to the upside. I could see this being a technical breakout as well, and then some sort of news follows afterwards. Just based on the fact that things are getting really tight now, and these moving averages, the way that they're converging, they're all flat. that hasn't really happened before. It's been choppy. The last two times that they converged, it was choppy. This is really flat, and the higher time frame moving averages are starting to come into this price as well as it's flattening. So this is really constructive in terms of it being a bottom, and the fact that Sailor or Strategy have also been selling bits of their Bitcoin pile, and it hasn't been pushing prices lower. The market hasn't been reacting negatively. It's really constructive, and I think it's only a matter of time before price starts to test the upside levels and actually potentially start the next kind of bull phase. And it would align with seasonality. The kind of September, October, November time for crypto markets are typically where major tops and bottoms are formed, and also aligning with the fact that midterm rally is likely to occur at that time. The typical duration of a bear market is kind of 12 months, so to say, and that October was when we really topped out. Just before then is when it stalled out, but that was the absolute top. So everything's aligning really for this to be the bottom, and for just a little bit more time and before the crypto markets start to push higher. But the fact that this volatility is so low, I'm really starting to pay attention to the crypto markets now. I think any signs of strength that come into the crypto market are really going to be worth paying attention to. In regards to breadth indicators, they were relatively flat yesterday. So the fact that the major indices did stall out and they did see a bit of downside pressure or selling pressure, the fact that beneath the surface there were no causes for concern in terms of massive selling pressure or reduction in kind of these breadth indicators that I'm monitoring, is constructive in the sense that it was just slight profit taking, and that actually the price is continuing to be supported at these levels. The biggest move was in the number of stocks making new 52-week lows, which would be a cause for concern if it was a major move of some sort, but it wasn't. It was the biggest move out of the lot, but it was nothing to be concerned about. It's still reading below 100, and it's still towards the lower end of its range. So for the time being, I don't see any signs of causes for concern amongst breadth indicators. And just quickly looking at StockB's primary breadth indicators, the number of stocks making daily moves of 4%, was still favouring the bulls yesterday. So even though it was more balanced, the buyers were still in control, and that's really constructive considering we had two really strong days, the two preceding days. So overall, I am, based on where we are in terms of price, and based on the fact that we've got a big news day tomorrow, I'm cautious coming into today. I'm not feeling like the market's going to make too much of a move in either direction. If anything, I'd expect to see more downside pressure, given the fact that we have had such a strong move off the lows, and there's no real reason for the market to get overly bullish coming into such a key day tomorrow. So I think the fact that it's a key day and the fact that it's the weekly end as well, it makes sense for continued profits taken to come in today and just wait for a little bit more confirmation in terms of what's really going on beneath the surface in regards to NFP and unemployment rates. So cautious coming into today.